What's up everybody, Tom here with another video. In today's video, we'll be discussing the latest news to do with the stock markets right now, including our thoughts on the FOMC meeting that just occurred. We'll also be taking a look at our technical analysis levels for the S&P 500, NASDAQ, Bitcoin, Tesla and more. Quadruple witching is almost upon us. Let's take a look at what that means for the market. Stay tuned. Alright guys, well one of the things that is best to do when we're looking at the markets is to look at a heat map of the S&P 500 to understand what was going on in the markets yesterday during the FOMC press conference. And we saw some interesting events. It's funny how these news events, they end up being a bit of a fizzer, but before the news event, everyone's very, very scared. And even the market yesterday was moving fairly heavily in what I call the retail trading hour, the pre-market into the first hour of trade. We saw Tesla actually down and it ended up closing up 3.68%. We saw some movements across all of the tech stocks down. And when we really look at the sectors and the indices, let's have a look here. You'll see what I mean. NASDAQ, Russell, both down fairly heavily at the start of the session. And then as Papa Jerome came out and showed that interest rates are going to remain low for some time, everything went back to normal. Remember, a big concern right now is about 10-year treasury yields, and that was really what they focused on yesterday. They focused on this idea that interest rates till 2023 are going to remain low. If we take a look at all of the sectors, here are all of the different sectors. They all benefited except for utilities, as utilities is really a late cycle kind of bull run thing to be invested in, and that is not where we're at right now. We're at an early stage bull cycle, if not a hyperactive one, but certainly an early stage bull cycle for the next couple of years. We saw XLK almost eke out a gain, which is the technology sector. Consumer discretionary did well, probably due to all of the stimulus checks going out. And we also saw industrials come along to the party with energy and financials sitting in between. So what's going to happen now for the stock market moving forward? Well, interestingly, we basically had the Fed talking about the fact that they're raising economic outlook, and they're also suggesting near zero rates through to 2023. And this is trying to keep that 10-year treasury down. They're basically saying it's okay. Don't worry, guys. It's okay. We'll have a look at the 10-year treasury to see how it reacted. But yeah, more of the same kind of discussion points. And I don't really think it's worth dialing too far into it, because basically on the essence, what's the price action telling us? It's telling us things are looking better. Now, for people that don't know and don't trade options, you may not be aware that a few times a year we have what's called a quadruple witching hour event, and it happens on the third Friday of every March. Now you'll notice here, having something like this market watch economic calendar for options is always good, because this shows you all the different major expiration days. And once you understand something like quadruple witching, you'll know that a huge amount of volume comes in through the Thursday and the Friday sessions. And then when you're looking at it on the charts and saying, why is there so much volume, Tom? Why is there so much volume? That's why. It's this quadruple witching hour event. So what is it? Well, basically refers to the date where the stock index futures, stock index options, stock options, and single stock futures expire simultaneously. So while this means lots and lots of contracts are coming in, what does it also mean? It means a huge amount of volumes go through the market. So if we scroll down here, you'll obviously see on Investopedia some pros and cons. And really, I guess one of the big pros is that it can lead to market gains, because what happens is you have a huge amount of volume that comes through the next couple of days as people expire their calls, take delivery, all of those types of things. And that can sometimes lead to demand in the market. So we may actually see some breaks of key resistances through this period. But if you're wondering why there's a huge amount of volume, it's the quadruple witching hour event, all of those simultaneous expirations of the contracts. So let's get into the VIX and the technical analysis to get started. I think the volatility index here showed exactly what we thought, which was a small increase in the VIX ahead of the FOMC meeting. A little bit of fear coming into the market. But as I mentioned on the live stream and I mentioned in yesterday's video, it was one that had to be a trade and very quick. Several key reasons made me think that 20 was not going to be held again on the volatility index. And it looked like we are correct. The volatility dropped straight out of the market after the press conference started, and it went down to a 19.2. So we have now officially closed our first daily underneath really the 20, easily underneath the 20 now at a 19.2. What does this mean for stability of the stock markets moving forward? Well, basically it means we're in what's called a normal market for now. It's not much more than that, just the volatility has decreased and we're back below the 20, meaning that some stabilization is occurring. And it makes sense if you have an S&P 500 almost at 4,000 for the first time ever and you can't get under 20, that would mean some very, very wild things are going on. So what did Jerome do to the markets? Well, he tanked the dollar. Let's have a look here at his comments on the dollar. Straight into key support. Watch this zone. It's worthwhile doing so. 91.38 was reached almost immediately, which were our two levels yesterday. Either it was going to break past the 91.96, which it looked to be doing so before the session. Didn't get any closes above. That's why you need to wait for closure as the key. And then boom, straight down to 91.36. So now we look for a daily close below this. And if we have one of those, we move backwards down, back into the session of probably things like 90, etc. It looks like the Fed are happy enough with where the dollar's at. And as long as it hovers in the structure or a range down here, maybe they'll be happy enough with that. US 10-year treasuries didn't really come off that much even after the comments. You'll notice here still 1.646. So the Fed may have, let's say, calmed everyone's nerves, but I do still expect the 10-year treasuries to continue to rise over a period of time. Now, they might decline first, but I'm still thinking that they could go back to a 1.952%. And do I think that that is negative towards the market, negative towards your trades? I'm not so sure it is. I don't think that moving back to 2 is bad. I just think it's moving back to a normalization after what was a shock in the economy, and now we move into the next phase. Look at the GFC. We've done it before on the channel. Things like this happen all the time in the bonds, and if it gets past like a 2, then you're starting to look at some serious big problems there. So who are the major beneficiaries of all of this? Well, firstly, Bitcoin absolutely bulled through. And the good news is for bulls of Bitcoin is it's back in town and it closed above that most important 57,000 zone. All these little body closes here were really important. We got above the 20 exponential moving average on the 4-hour. And for people that missed this and people that weren't getting in on the lows and didn't have that sentiment, we obviously thought here it could go down to the 52,000. I was looking at yesterday, it did look a bit shaky. Well, the good news is the 20 moving average on the 4-hour has been a good initial pickup zone. So what we might have here is a little bit of a pickup, 60,000, a little bit of a sell-off just quickly to the 20 moving average, and then a further move up. Now, I think this is really signifying that the market wants to move to the next level. And where's the next level going to be? Around 65,000. We've basically got a double bottom here, push forwards to 60,000, 62,000, and then hopefully up to the 65,000. Things are looking good for Bitcoin. Remember, we're only still in part of this longer term cycle. We're a day about 320 since the halving event, something like that. And you know that by statistics, there is still bullish green sky or blue sky ahead, if you want to call it that, for BTC and for other cryptocurrencies if they continue the same halving trends as they've done in the past. We'll let you know on this channel though when things change, and at this point we still should be bullish on the medium term, but the super long term there could be some headwinds later on this year. We'll talk about that at a later point. Let's have a look at gold. Gold, of course, broke through 1740, got smashed after the FOMC press conference. We see a movement up here to 1760, where the previous resistance and previous supports should act at a level. And I think this will be an important zone for you to have on your charts for gold traders. But beautiful close above 1740, and also some nice price action right now in the markets. Gold's looking bullish for the first time in a very, very long time. Silver also kind of flirting with an area here, and that area is the 2640. If we get a closure above here, we can then move towards 27 and possibly even move towards 28. Remember, low interest rates for a sustained period of time have a tendency to also make people move into commodities. make people move into inflation hedges. All these types of things just do happen. And that's what we're seeing. We're seeing gold and anything against the US dollar, especially materials, improve in value over the last 24 hours. Let's go to Tesla. Great news for Tesla bulls. What an amazing hold there. We talked about this on the stream. We did open underneath the 660, but we easily held above. Look at this daily. Super bull pressure coming back through. Really great to see. Now we're talking about some pretty serious looking trends, because what have we got, guys? It's almost the dream. We've got the left shoulder, the head, and the right shoulder. We take and expand out this head to the neckline, which we'll call around just underneath that 720. And guess what? Once we get through the 720, we could be predicting back to an 890, 888 zone. So there's some serious looking TA here that's appearing on Tesla. We've got crosses of moving averages on the 2 hour now towards the bull side. We now have to contend with the 720, but once we close above the 720, I've said it a few times, I believe we could go towards the 800, and you just need to start watching it around the 780. So 780 to 800, I would not be surprised at all for the market to do something like this. And then move through. But lots of things looking good. Inverse head and shoulders on plenty of pairs, and Tesla is looking bullish. GME AMC crowd, while AMC did really well, closed into aftermarkets this $14 area. That's the resistance. If we see an open during our live stream, which we'll be doing live on Thursday for the market open, if we see an open and a 15-minute hold above 14, possibly then we move towards the 16, which is our next one. And then the longer term target for AMC buyers is, of course, the magical 20 area. For GME crowd, what happened? Well, it's not as strong, but at least we held above 200. So 210, 211 post, you'll notice here in the video recording. These levels are good, and as long as it continues to hold sentiment, remember sentiment is key to these trades, then things can look a bit better. 240, 295, and 350 are all resistance strikes for GME, and you certainly don't want GME below the 173. 2 bounces off that area now. It does not want to go underneath that, because then you're starting to look at a crash scenario where it could all be over. Remember, sentiment is always key on these. NASDAQ, things are looking great. Some people are pointing out things like an inverse head and shoulders here with the right shoulder, left shoulder, and then head. Yep, I think that's fair. And I do think that this 13,300 is the most important level that we've faced for some time. We close through this, and I mean, tech is back in pound, because it should go towards the 14,000. There's not much stopping it after this. The structure on the left-hand side is pretty weak. You might see some resistance at 13.6, but at least the 13.3 to 13.6 move should be in the bag from a technical standpoint. Just look for a closure above the 13.3. And after yesterday's initial kind of down section through the first part of the morning, we said 13,000 and 12.8, 12.750 were our key supports for the FOMC. 13 held. The FOMC was a non-event kind of thing, which it's been for a while. And now 13.3 gets closed. We can move to the 13.6 and onwards to the 14,000. Things are looking again very bullish in tech, and we've managed to evade that news for now. Things are looking good. What about the S&P 500? Well, it's going towards 4,000. I don't know if many things can stop it. Quadruple witching will always be an interesting time, but that has led often to a little bit of gains in the market due to all of these expirations happening and people taking maybe delivery of their calls, etc. So 4,000 could be on the line. Stimulus money's in here. Do we move up to our trend line? Continue to have the trend line on your charts, guys. But yeah, it's looking good. It's looking green, and hopefully we can move to the next section. So if the bears want to come back in town, well, maybe that can happen at the trend line. Thanks so much for the support recently, guys. We are almost at 50,000 subs. I announced yesterday we'll be doing a t-shirt design competition. 200 odd is the prize. You can message Thomas, Thomas, at fxevolution.com. I'll put the details hopefully down below or on the Discord room. And if you've got a design, send it through and go in the chance to win that money. And of course, share your design with the community out there. Thanks so much, everybody. See you in the next video, and see you today for the live stream pre-market 2.5 hours before the market opens in New York. Bye for now.